Hi, everyone. Welcome to the Flow Real Estate Show with Athena. And it's Mortgage Money, and we're doing a little bit of coffee talk. So, my name is Athena Chalikas Barocas. Not only the creator and the host, but I'm a top producer and award winning realtor here in sunny South Florida. Today is Monday, June 5th, 2023, and we're going to dive into a great topic. It's a hot topic, and that is interest rates. So before we get started, if you find the information interesting, please subscribe to the channel. We'd love for you to be part of our community. Now, let's get started and meet our guest of honor. We have Julie Dinda of the Radius Financial Group. Julie, it's always great to have a friend and an expert on home loans on my show. I hope you have a cup of coffee and are ready to jump into the topic of interest too.
Of course, absolutely. And thanks, Athena. I love being invited to your real estate show. South Florida is such a unique market. And for those listening outside of South Florida, I hope you get a few nuggets of information as well.
Oh my God, they're going to need a wheelbarrow with all the information you're going to give them today, Julie. I love it. Absolutely love it. So, Julie, as you know, I have been a realtor now for over 20 years, 2 decades, crazy in itself. But I have
You
seen
started
the
when you were
cycle.
10?
I did it. Oh my God. That is too cute. Thank you, Julie. Oh my God. But we have seen this rise in interest rates before. And I'd like to talk about this because some buyers, this is the first time they've ever seen this. So what are the analysts saying?
So, what aren't they saying is the real
Mm.
question. So, mortgage rates refer to the interest that's charged on loans used to purchase homes. So, they play a crucial in the housing market and are influenced by various factors, including inflation, economic conditions, and we'll talk about that today. But inflation is closely tied to the overall health of the economy. So, during periods of robust economic growth, inflation tends to rise, which can impact mortgage rates. So, strong economic growth often leads to increased demand for loans and borrowing, pushing up those mortgage rates.
Yeah, well, buyers have certainly seen that happen over the last 12 months. What were we doing? We being the banking industry, we're giving out what, free loans under 3%, right? It was
Yeah, free
beautiful.
money,
And then the last,
free money,
free money. And then the
definitely.
last 12 months, what did we see? Tick, tick, tick up to what, 7, 8, 9%? It was
Yeah, it's
crazy. It was such a high rise in what, 12 months, 13 months?
exactly. And so even let's take COVID for example. During that time we were experiencing that healthy economy. Interest rates were
Mm-hmm.
low. There were lines around the block to buy a house. I know for sure your houses were loaded. And mortgage loans are fixed in nature, so they have a set interest rate for the duration of the loan. So inflation erodes the value of future fixed payments. So that's meaning essentially what that means is that lenders and investors need to account for this potential loss. So to compensate for the inflation risk, lenders may increase mortgage rates to ensure they maintain the desired return on their investment.
Yeah, that makes sense from a lending industry, but the poor buyers, right? They're so confused. But you know what's even more confusing are these headlines. And I know you've seen them because I've been reading them. And it says to tell buyers, stop, wait for the rates to drop again. I have been finding that the new norm is going to be somewhere between the 5 and 6% mark.
Yeah, it's important to note that while inflation is one of the factors that influence mortgage rates, other factors like economic indicators, housing
Mm.
market conditions, lender profitability also kind of come into play. So mortgage rates can be complex and they're influenced by a wide range of factors beyond inflation alone by itself.
It's so true. It's so complex. You and I have been doing this for many years, and we're still not the experts at it. It is just such
Yeah,
a
and you have
complex
to
subject.
keep in mind that over the past 25 years, we've seen rates go from 3% to 9%. While it's true that mortgage rates can vary, it's essential to consider other factors while deciding whether to wait or proceed with the home purchase.
Yeah,
These
absolutely. Yeah. No, I'm sorry. Go ahead.
No, the factors include your personal financial
Mm.
situation, your housing market conditions, your long-term goals in general. It's always advisable to consult with a mortgage professional who can provide current and personalized insights based on your specific circumstances.
That's so true. It's so true. And regardless where you're starting, you can start in a condo, a single family home, a townhome. It doesn't matter. But the ability to own a home is even more important than even looking at the rates. It's, the value of home ownership, right? And it is just a way of building wealth. We've seen in the last, what, 1.5, 2.5 years, appreciation go like this out of here. What was it? 34%, I think, was one of our highest marks in the last year for equity growth.
Oh yeah.
It was just incredible. It's incredible. So, now might be a good time, for homeowners to think about whether, and stop worrying about maybe the 6% interest rate and talk about how they can use this equity to buy the home that really fits their needs today. I mean, you and I talk about this all the time.
Oh, absolutely. And first, let's just talk about the amount of equity that we've gained over, the past couple years. So for example, I purchased a townhome 10 years ago just outside of our beautiful city in Weston, for $136,000 right
Oh my
before
God, that's
COVID.
free
I
to me.
know. You can never find that now. Good luck. Um,
No.
but right before COVID, my house was actually valued at 335,000. So I was like, winning! This is great. I'm killing this. So fast forward to just a year or two later, my neighbor next to me without a garage sold her townhouse for $497,000 pre
Whoa.
the it's crazy. So, and that's pre-COVID. So now today, if you do the math on that, that's almost $361,000 worth of equity. And if you wanted to add like the $264,000 I'd probably be paying in rent over those 10 years,
Oh.
you're at almost 600,000. But if you go back to the equity, that's $361,000 that you can work with to possibly get, your kids just graduated from high school in a town in the suburbs, and now you've done all that work, so now it's time for you to go to the beach. So let's use that 361,000 to get you to the beach to where you really want to be.
That's a great point. How many homeowners do we know raise their kids in, the A school districts or in suburbs or near the schools, and then the kids go off to college and then they sell and they go where, Julie? They go to the beach, right? And they can
Yes.
do that now because they have the equity that they didn't have 5 years ago. So
And
that's a
what's great,
huge plus.
yeah, and I mean, and if you even if you have that money and you've invested and you have some money on that end, keep it as your rental property. Obviously, you're doing great things.
Oh,
So yeah, there's so many options that you have for sure.
no, that's true. So people should really, I think, buyers, sellers, investors, don't worry about the interest rate. Buy something that makes sense for what you need to do today. But you know what? Let's face it, Julie. So many buyers are nervous today, right? The new norm in the interest rates, they don't understand what that means. And they're afraid they simply won't be able to buy a home. And that's kind of heartbreaking because home ownership, as we talked about, is so much more than owning a house, right? It's so much more.
Yeah, I agree. It's a home. It's where you spend your time cooking in the kitchen,
Mm.
binging on your favorite Netflix shows. It's
Oh
where you
yeah.
set up your nursery or move your parents in the extra bedroom. It's about building memories and feeling secure.
Yeah, and I think back on the house that I had when I was raising my kids as a single mom in real estate. That's all I think about, and all the fun memories and the things we used to do and the holidays and the gardens. I don't once think about any of the frustration or any of the work or challenges around it. So I definitely agree with you. It's more than just a house, it's a home. It's a home.
Yeah,
Hey,
I
another
agree.
question. You're gonna ready for this one? This is a hot question. We're talking about interest rates, Julie, so hold on. Should a buyer shop rate? Oh my God. I know it's
Oh,
your
she
least
said it.
favorite
Who invited
question.
her? Who did that? No, rates are important. However, what separates the lenders is the level of service. So, in a market where you have nobody putting offers on houses, why don't you get a lender that jumps in and says, hey, why don't you try and see if you can get a seller concession and have them buy down your rate for a couple
Mm,
years, until maybe a situation gets better, or do a refinance options and just have a plan ready for you. Okay, so because answering calls, providing pre-approvals, talking about budgets, reading reviews, all of that is just a really great way to find out what other people have experienced and really get an idea of, will you be able to talk to this person? Because that's ultimately what's important when you're trying to buy a house in a very, stressful, probably one or two, you probably only buy one or two in your whole lifetime. So,
yeah, no kidding. Okay, so on the real estate side, I have to tell you, answering a phone is detrimental, right? It is
yeah,
so important. I can't tell you the number of times I go, my clients, they choose their lender, and sometimes they choose them from the internet. And the internet lenders only work Monday through Friday. When am I shopping for homes with my clients? Saturday and Sunday, Julie. And they're
every
not
Saturday.
answering the phone, right? Every Saturday and
Yeah,
Sunday, and they're not answering their phones. Oh, that just doesn't work. It doesn't work.
no,
But I know I can reach you
yeah.
Saturday, Sunday, holidays, day, night. You're like me. We work all the time. But that's important to our clients. I mean, that type of customer service really makes a difference.
Yeah, absolutely. And speaking with a loan officer is a crucial step for home buyers to determine what they can afford, understand their financing options. You know, while there are 8 topics I cover in every initial call, the one that I believe benefits the buyer the most is when we talk about the buyer's financial situation. I talk
Mm,
with the buyer about their current financial situation. I discuss key aspects about their employment, status, their income, their credit score, existing debts, and any financial obligations in general, because most people don't even know that they have those, on their reports. This information will help us assess their overall financial, health and determine their loan eligibility. So we also
yeah.
cover. Yeah, go ahead. I'm sorry.
No,
like,
I'm just saying it's so
I'm like
important.
getting
Yeah.
involved on what's the most important. We cover home
How do you
ownership
choose
goals.
one? You have so many
Yeah,
different, different things that you do that are also
yeah.
important.
And it's really the
Yeah.
goals, your home ownership goals, your affordability assessment, and this helps the buyer understand how much they can afford by considering their debt to income ratio. How much money are they bringing in to how much money is going out, and also
Yeah.
their down payment capability. I like to educate the buyer about various loan options and programs that may suit their needs. Then I like to address questions and concerns and provide a clear and concise answer to address their questions and queries, and
Yeah.
help alleviate any of the uncertainties that they may have about the process.
Yeah, no, it's a deep process. And, shopping rates is just, it's just one piece of it, but such a small piece with the overall service that, any good lender would provide, especially so that makes perfect sense. So I think that, the final takeaway, unless I'm missing something else, but I think the final takeaway is that if somebody's thinking about buying a home, the interest rate should not derail them. It should motivate them to go ahead and pick up the phone, call a loan officer, call a realtor, and just better understand where they are or where they are or where they could be in the process,
Yeah,
right?
absolutely.
Yeah. So listen, everyone out there, buying a home is overwhelming. It is just overwhelming. But if you'd like some help and would just like to kind of do a little hood check and find out where you are in your home buying process, reach out to myself, reach out to Julie. We are both here to help you and really to answer your questions and to make the process a little bit easier. So, Julie, I love having you on SoFlo Real Estate Show with Athena. You're one of my favorite guests. So
Always
I
a
hope you
pleasure.
love being here just as much as
Always a
I have you
pleasure. I
there.
do. Yes. I shoot my espresso and I'm ready to go.
Woohoo! I love it. I love it. So next week I won't be here, but the following week, Julie, you'll be back with us, right? And
I'll
we'll
be
be talking
back.
about, yeah, I'll be back. And we'll be talking about the pre approvals and the different types of pre approvals and how to have a pre approval that's going to actually win in a multiple offer situation. So
Yes.
I look forward to talking to you in 2 weeks, not next week, the next week after. And for all of you out there, if you liked what you heard and you want to learn about pre-approval, subscribe below so you can go ahead and get the invite too. Thanks, everyone. Have a good day. Thanks, Julie.
Bye.
Bye.
Thank you. Bye.